Good weekend, all. Ira Epstein of Linn Associates with your weekend edition of this financial market wrap-up for Friday, and we are now on the 8th of March, 2019, just getting on to 3:30 p.m. Central Standard Time. This will be where the closing prices of the stock indices come in. As I'm talking to you in this tape, they'll reopen for the last half hour of trading, but that'll be the settlement prices. Remember, on our weekend edition, we do things a little different. I first look at a monthly chart, then everything else is going to be weekly charts after that. One of the things I've also been doing is in the morning subscriber video, where that's my subscription service, I'm slowly adding now the ETFs, QQQs in there, just added an energy ETF. I'm going to add a few more going on through there so that those of you that are looking for things for the stock market, well, not only do you have the commodities, you've got the stock big ETFs in there as well. Eventually I may do an ETF service, don't know, but right now I'll cover and keep adding for you, so away we go with that. Today, what we looked at was the jobs data. It came in, and I thought it was missing a zero. It came in at 20,000 jobs added. I thought somebody had typed wrong, that it should have been 200,000, because 180 was the guesstimate. Didn't come in there. Larry Kudlow, they immediately had him on TV, and he goes, it's a fluke, you know, people don't look at it. And in the marketplace, I think they bought into that. Because you dropped a lot, you came down to 25,213. You're back up, as you can see, 280 points roughly off those lows, 25 points off the lows in the S&P. The Nasdaq came back almost 100 points, and 13 points in the Russell. So, good news there. You also got bids into the bonds and notes, and they sold off from those bids, so the markets weren't as nervous there. Energy markets all selling off a little bit, and on the ag, we had some reports on supply demand, both worldwide and in the U.S., and we had our cattle on feed reports today. So when looking at the market on a monthly chart, first thing I did wrong, monthly chart, when I look at it, I just get an idea that the 18-month moving average of closes were, for all purposes, we got down very, very close to it, and we're right now trading at 27.47, and that number's 27.22. The market has had a tendency, as you can see, since 2016 to stay over it, but as we came out of 2018 into 19, we're whipping back and forth right around that number. As you go over to the weekly charts, and this is of closes only, you've moved from 24.8575 as high as 28.05, and now we're back down about 50 points from there, 60 points into the 27.47 level. Okay, but we're still over the 18-week average, which gives this market a friendly bias. What the market did on this whole rally from 23.16, Christmas Eve basically, by the way, was we rallied up in the previous zones that have been resistance. You and I have been talking about this for a while. For a pattern there, I even had the Fibonacci numbers, if you'll remember, and they came in with your number resistance right in this general area. So that has been what you've done. This is an important week because you have what's called an outside week down in a resistance zone. If this week's high is taken out, be it next week or the week after, I will call this break a bear trap, and I'd look for the market to move into the next resistance level. Doesn't mean I'm right, by the way. You could take it out and immediately go under the low, and then I'm not right. But that's what I'd be looking for out of that if it's taken out. Doesn't have to be taken out. When I say that, it's because of what we've done. You've got this big reversal, but the legacy is still one of higher lows and higher highs. So an important week in a resistance zone that you've been at before. If the market were to continue with the breakdown, I wouldn't be surprised to see support come in against the 18-week moving average of closes, this red line, that comes in 26.72, and then the 100-week. That would still keep you above the last break low in the market. So market still has innately good action in it. When we look at the Bollinger Bands, you haven't been able to carry up to an upper Bollinger Band since last September. And of course, that's when we had the big break. So the measurement of this strength isn't as strong as it could have been. Hitting that would have been a lot nicer. When I look at the momentum of the market, when I look at slow stochastics on a weekly or a monthly chart, I do not look at them to get overbought or oversold. I just looked at what the trajectory is. And the trajectory remains still bullish. In other words, it's been pushing up. Yes, it flattened out a little bit, but the red line, which is the K line, didn't reverse under the D, the blue line, pointing momentum down. Hasn't occurred. When we come over to the Nasdaq, it's very similar. In the Nasdaq, we had 3 steps down right here. You can see them. We've rallied basically into that area, and the market, like the futures, like the S&P rather, had a reversal week to the downside. I'm so used to the daily charts. Take that out, and I think you'll get to the upper Bollinger Band. More important, you probably get the whole public bullish on this market. Again, is anything changed on the bigger picture? It hasn't. It's still higher lows, higher highs. And as a technician, that's what I look for. Support similar to the S&P. First the 18-week average, then the 100-week. The difference here is to get to the 100-week, you have to break the pattern of higher highs, higher lows. So the better support is right there. In the Dow, this is a different look than you've got on the other 2 charts. What you've had is a straight up line that finally has a correction in it. Up until this week, all you've had are consistently higher weeks. Do you see that? This is the first week where the market pulled down on you. Okay, 500-point break. It's not a little bitty break. It's a break of 2% for the week, and that's fine. Momentum is still up. You don't have a trend here. I realize you've got this huge upthrust. Trend defined as higher lows, higher highs. You've got a lower low and a higher high. You can get a trend going. Take out 26,238. You'd have higher lows potentially, higher highs. You haven't done that. So I watch it and I say, okay, we'll see what goes on. The Russell, like the S&P and the Nasdaq, has the higher lows, higher highs. It too has momentum that is still pointing up. It is in its correction mode. It's had a nearly 4% correction this week. But you see the difference between these charts, and if I come back, for example, to the Dow, straight up, never had the pullback in it whatsoever. This did. In the VIX, you're finding support in the market against the 100-week average of closes. And if you go back and you look back in time, you go to 2017, you came down to the high points, went into it a bit, of where we were last year. Remember, there was no volatility until the very end of the year in a good part of 2018. Now you found some support. Resistance should be back up at the 1906 level. As we come into the T-notes, I don't see a trend. I see a market that's going sideways. It's got lower high. Now it's got a higher high, lower low now, because this week really changed that picture with today's rally as it continued on. So I'm not seeing a trend. I'm seeing more sideways action against the 100-week average as resistance. Hasn't been able to get back to the 18-week, and momentum has gone flat in the market. In TLT, the popular ETF, you have a higher high, lower low. I call the red line, and if you take my charting course, you'll see often I say it's the line in the sand. It's an important number. If you get to a Bollinger Band, it's not uncommon to get retracements to that 18-week average. Now, this is a weekly chart. It's not as volatile as the daily. In the daily, you even see it better. But when you pulled down to this number a week ago, you found your support. It magically stopped. I'll use that word magic at the 100-week average right now. I don't see a trend. I see sideways action right now. In the dollar index, on the weekly chart, this chart is in a position of it's sideways. Notice how it hasn't been able to get down and hit the lower Bollinger Band. You have to go way back. It has had no trouble on spurts to the upside getting to the upper band. But as you've gotten there in the past, you've fallen back. Now, for those that want to say the dollar's going to break out, what you have to do now is get over that number and stay over it. If you take out 95.71.5, that's the number there, you'd end up with a higher high and lower and low still in that sideways action. At least right now, first time that we can say this in a while, this chart's staying in a bullish pattern. It began back here, then with the higher lows, higher highs, and finally up to the upper Bollinger Band. Still in a bull pattern, momentum up. Eurocurrency, bear pattern. Mr. Draghi scared the heck out of everybody this week when the European Central Bank president changed the growth for the EU. When he changed the outlook for interest rates, none this year, maybe something the year after. We'll see. Now remember, I think he's out of office also, October or something. It's not that far away. We'll see who the next president is there. He's done a really good job, I think at least. But lower highs, lower lows, and remember, the European Central Bank is not like our Federal Reserve. They're generally behind the eight ball. Our guys want to be in front of it. It's very different thinking. But of course, we're a nation, and they are a bunch of separate countries that created a union. As I look at it, coming down, getting momentum down, trying to break out to the downside, it's flip-flop of the dollar. When you come to the British pound, if you knew nothing else, and you come up to the 100-week average in the upper Bollinger Band, and you knew nothing, you don't even know the name of the chart. That's where I think pros take money off the table, and you're pulling back from there. Support back at the 18-week average. Take out 127.91, you change the chart. As the chart sits right now, the swing line's up, bullish. The bias is up because you're over the 18-week average and momentum went flat. Canadian dollar, bearish. They've got plenty of problems, be it export prices of their goods, be it getting their oil out to the market. I can go on, and the shakeup in the cabinet that's going on. Lower highs, lower lows, bearish. Momentum pointing down, bias down. The bears took control of the market. Resistance back at 75.26. You got to take out 76.30 to negate the bearish action. In the Japanese yen, heck of a run-up it's had over the past 2 days as we've scared people in the U.S., but all it's really done is come back to the 18-day average. Now, it's right now at 90.01. The 18-week moving average is 90.24, so it's staying under that. It still has a pattern of lower highs, lower lows. On the daily charts, I know it got back towards that 18-day average and neutralized itself there, but this is still a bearish chart. You'd have to get over 90.76 to negate it. Momentum down, bias down, trend down. Bitcoin. The objective when you lost on the weekly chart, this momentum, when it started turning up, might have been the 18-week average of closes, and you're finally there. So I don't know what to tell you from this point. The market is not in an uptrend, but it's no longer in a downtrend. In Brent versus WTI crude, many of the pros like being long the Brent, short WTI, because OPEC and Russia are cutting back production, whereas the U.S. is hell-bent on increasing production all the way through. Although today I will tell you that the Baker Hughes rig count fell again. So as prices have languished here for a bit, we are seeing less production in terms of the oil wells. In total production, our technology is such that with less wells, we're still producing more. And that has got the spread to move from $6.87 to a differential where it got over $10 difference. It corrected, and now it's back up to a $9.67 difference. When you look at Brent, the trend is up. Higher lows, higher highs. It's leaning on support at the 100-week average. It even has further support down at the 18-week at 61.88. You'd have to get under 59.40 in order to break this pattern right now. Should the market decide to mount a rally, I'd look to see where the Bollinger Band comes in. In WTI, here's the flip-flop. You saw in this market, it's falling back to support. This is a market going up to resistance at the 100-week average. It's still in an uptrend. It's got the higher lows, higher highs, but you have pretty solid resistance between 58.37 to right now 60.60, the upper Bollinger Band, with support back at 52.91. In the rebob gasoline, it's just plain bullish. And I know I've been talking about this because come spring, the market often does that. And you actually began it earlier than then. Higher lows, higher highs. You're in a resistance area. You tried today to break gasoline intraday hard. If you take a look, you're going to see, I think, a 5-6 cent break today, and as it turns out, the market comes roaring back. On the weekly chart, you're up 4% for the week. Wow. Natural gas, no. Natural gas remains in a bearish overall trend. Lower highs, lower lows. The daily charts have certainly had a reaction, and on them you had a flare to the upside, but you've still got this overall pattern of lower highs, lower lows. Now you can negate that by taking out last week's high, which was 290.80. If you did that, then the resistance at the 100-day may come in higher than that, the 18. Now we have to see if the market has anything left downstairs. Whew. Lot to talk about, right? Well, you know, one of the things that I love to do is in the mornings do my morning video, because actually there I say buy here, sell there, do this, here's a stop, here's a price objective. I've had emails from a number of you to add different ETFs to that. I'm doing it. So I began this week with 2 of them, actually, the QQQ and the Energy ETF, and I'll probably add a few more. I don't want to sit there and do 45, 50 minutes in the morning. You understand that. I want this tape to be 10 to 15 minutes, no more. If there's a market, maybe I'll drop something. Maybe I'll drop feeder cattle and just stay with the others. Who knows? But I'll give you what you want, because the idea there is to cover the different sectors and to give an idea of chart action. And that's what it is. I'm not a fundamentalist. I'm a chartist. I'll tell you what I'm seeing, what I think the pros would do at different points on the charts, the technical and fundamentals in terms of major reports that come out in the morning, like this morning's jobs data, what might it mean, and trade ideas. Because if you're like me, you think I don't die 1,000 deaths when I'm putting out trade ideas for my clientele? I do. I take it personal. If you lose, you know, what can I say? I'm doing my best. When you win, I'm jumping that joy. I'm having that wine at home. But if you're like me, you wish you could go and talk to somebody. Hey, I'm seeing this. What are you seeing? Most of you don't have that opportunity. So what I try to do is I'm the guy behind the screen. And you don't have to worry, I'm not your broker in many cases, or if I am, you're not talking to me, most of you. And what happens is you're looking at somebody else you might respect, I hope you do, and you're saying, I like that idea. I wanted to buy, there's the reason. Or I want to buy, but boy, he's bearish on the market. Whatever it is, the idea there is to give you ideas and reasons that I'm seeing. I don't walk on water. I'm going to be wrong. It's a guarantee. I laugh about it. I said, if you could see me, I'm probably like Swiss cheese. I've been wrong so many times. I've also been right a lot. It goes every which way. You know, with the risk goes the gains and the loss. The key is money management. It's a big key. Anybody can say buy or sell, but you got to be able to keep the money together as best as you can. Introductory price for this, about 26 cents a day. Yeah, $8 for 30 days. And then if you like it, you stay. You can either then go to a 30-day basis, or you can go to a 1-year basis. Your call. I'm Ira Epstein. How you get it is call my staff. You can also go to our website, and when you go there, go under education or research, morning subscriber video, or best yet, you can click here. It'll take you right to the page you need. I'm Ira. Long talk today. Big one. You have a good weekend.